Jonathan, about your thoughts on the Syrian, the volatility and everything at foot. So, what's your concept of it in terms of market reaction and how people position themselves to sort of be more concerned about the Syrians as opposed to trying to work out their portfolio? Like, what do you think you do?
Yeah, I think as investors we should expect that the destabilisation of the Middle East is here to stay.
Yep.
And there's some really good research you can read up there. Unfortunately, he passed away last year, but there's a Dr. Rufus Fears, F-E-A-R-S, wrote some interesting papers and gave a historical perspective on the Middle East. And his take on it's fascinating, because what he basically said is that the Middle East doesn't want democracy. We try and impose it on them, but they actually don't want it. What they want is a strong ruler who brings in the rule of law and provides them with food. But because you've got so many different sects and different religious beliefs, you've just got a melting pot of conflict. And in fact, he said there was a lecture that he gave, and I know you're not supposed to ever read on television, but I'm going to do it on this one occasion because it's going to give every single one of your viewers some perspective on Syria.
And those on the podcast, listen clearly.
Listen clearly. The title of the lecture was The Lessons of Ancient Rome for America Today. It was given in September 2003. He said this: American troops are on patrol today in Baghdad. American men and women tread in the footsteps of so many armies who have come before. The charioteers of Ramses II, Pharaoh of Egypt, the Persian troops of Cyrus the Great, the Macedonian phalanx of Alexander the Great, the Roman legionnaires of Julius Caesar, the Crusaders of Richard the Lionheart, the troops of Napoleon, the camel corps of Lawrence of Arabia. All these armies have come, many of them with good intentions, determined to impose Greek or Roman or Christian or democratic values on the Middle East. All have failed, all have gone away, leaving barely a trace in the sand. The Middle East endures. Isn't that fascinating?
Absolutely.
Isn't that absolutely fascinating? And so we think, the Americans are going to solve the problem. They're going to bring democracy in. No one ever has. The Babylonians fought over it. The Hittites fought over it, over Syria. And here it is, still in conflict. Because what's actually happening is the net exports from the Middle East is declining.
Correct.
And the reason it's declining is because they're using so much of it to generate electricity. They're using so much oil to generate electricity. Now, what's going to happen is their time horizon is so short. Now, they're just trying to stay in power. Their time horizon is shortened, and because the time horizon is shortened, they're not thinking long term, so they're not investing in alternative technologies, and that's going to mean more destabilisation over there. We're going to have more wars and more conflict as they run out of money to pay for food.
I suppose if I was to ask you, in that volatile environment, what's your first priority? What's the first thing you're looking for from a portfolio perspective? What would you say? Just
safety.
Just ignore it, or do you go safe haven?
Ignore it or safety, I think.
We're value. I won't go so far as to suggest that we're taking advantage of the crisis, but what happens is you get big sell-offs in stocks because people think, there's going to be a nuclear strike or whatever it is, or a chemical strike, and so they sell stocks. But is what is happening in Syria going to affect the number of $2 buckets that the reject shop sells? No. Is it going to affect the number of customers that Woolworths has? No. It's not going to impact that. So we're looking for the market to react emotionally to things that really have no impact on Australian businesses.
Yeah.
I like Ben Graham's quote. Don't listen to the market.
Yeah.
It's not its wisdom that you're trying to take advantage of, but its wallet.
Yes. Ben Graham is very smart. Now, I just want to draw everyone's attention. We're about to go to a break, but before we do, I just want to give you a visual. For those in the podcast, I'm sorry about this, but this is Roger this week in the Australian. He's hit the big time. Now that's Roger with Mr. Buckland.
David Buckland.
David Buckland, who's the CEO of the organisation.
Montgomery.
And he's also the furniture removalist, because he's put that chair in there somehow. I don't know how you got that in there.
We gave the chair a tour of the office.
But
grounds,
David is
basically
clearly exhausted, and he's collapsed behind you, and you're sitting there like King Tut.
And we only own, other than this white one, we only own in the business those two shirts, and we just swap them between each other. Nobody knows.
Roger, if we can go to you about the reporting season, I hear a lot about it, and I look at the various drafts that come through on Bloomberg. What was your sense of it?
Look, I think for the companies that we've been following, which are the higher quality companies, those with bright prospects, there seems to be some success overseas, which I've Nobody's really talking about that as a theme, but you've got companies that are doing very, very well overseas. For example, Flight Centre is expanding at an extraordinary rate in the United States. So that's going really well. And what was interesting is when we bought Flight Centre shares for the Montgomery Fund quite some time ago, people were saying, oh, well, if the Aussie dollar goes down, we're going to see a lot less outbound travel from Australia. And what's actually happened, that hasn't transpired at all, as the Aussies dropped from $1.10, $1.05, now 89 cents. Flight Centre hasn't experienced that. In fact, what's happened, and something that we anticipated, was that the airfare wars would bring flight prices down, and so it was less of an issue. The currency is less of an issue, more of an issue is how much does it cost me to actually fly overseas. And so that not only have they seen no detrimental impact from the decline in the Australian dollar, but their business overseas is growing. Breville Group, growing fantastically overseas.
Let's talk about Flight Centre. How is it growing business in the United States when...
It's rolling out stores.
Expedia, all that sort of stuff, everything's so... America is such an online world now.
But what...
And all those...
you go try
all that sort of thing.
But can I just say, I mean, what we tend to do is we tend to throw everything. Humans tend to simplify things, or we like to. We throw everything in one basket online. Everything's going online. But what you don't understand is, yes, it's easy to book a flight online. Yes, it's easy to book a hotel online. But try and package up a tour. Try and organise your own tour of Europe online. You'll be there for a month trying to do that, online. It'd be a waste of your time. You're better off watching Big Brother or something, something mindless.
That's not Kerry from the Gold Coast. Hello, Kerry. How are you?
Hello, Mark. It's basically a two-pronged question. I'd like to ask Roger, when they sell out and go to cash, I mean, do you go to for duration term deposits or bonds? And two, look, I've heard on Hot Copper, read on Hot Copper today that apparently Invocare are going to relocate some of their crematoriums to possibly to the Middle East to take advantage of their high death rates due to the lack of death rates apparently over a warm winter in Australia this winter. Thank you, guys.
Yes, so I know about the Invocare result. The company, we should say at the outset that Invocare is Australia's largest funeral service provider, and they didn't complain, but the mild winter in Australia, and it is the driest or warmest winter on record in Australia, has meant a lower death rate in Australia. So less influenza and so forth, and so the company...
No, folks, I just want to enjoy this because this is really terrific TV. Let me tell you, this is the best. We're going all over the world with this one. Let's go, keep going.
It's just such a... I mean, we joke about it, but imagine running one of those businesses. The hardest thing about being a funeral director is sitting around and saying, mate, you'll look after my funeral, won't you? And then that bloke dies, and then you're looking after their funeral, and it's so personal because you actually know them. They've got a tough gig. Anyway, Invocare, I know that's a fact. They complained, they pointed out that the death rate was lower this winter. I don't know about the Hot Copper discussion. It's not a place where I go to get my information, but it's easy to find out if that's true or not. You just ask the company. So that was the second question. What was the first question again? You still there? Do we remember what the first question was?
I'll have to think.
Going to cash.
What do you do with your fund?
So the answer to that is because we're equity investors and we're always expecting to get back into the market, what we do is something really simple. We tier our term deposits or our bills. We tier them 90 days, 90, 60 and 30 days. If we've got nothing to buy at the maturity of the 30-day term deposit, then we roll that back into 90 days. So we've always got 30, 60 and 90.
Rolling.
And that's what we keep doing. We just have a tiered or a cascading
and you can
series.
That stuff and get the cash and
correct. We can't do bonds because the duration's too long.
Okay.